All right, Sami Abusaad, happy Tuesday. How you doing today, man?
Good to be with you. I'm doing great. Thank you.
It's good to have you back on the show. So let's get right into it. We've got a busy week. Of course, CPI coming tomorrow. Last week what was also a big week. I mean, the market got a little hit last week. How are you trading the downturn?
Um,
Or what have you been trading, Sami?
so I did trade gaps. So it doesn't matter what the market is doing because every day is a new list. And the swing trading has been slow. And then I also do earnings. So I try to predict what the company is going to do before it reports. So it doesn't really matter what the market is doing. Actually, I'm in the Oracle today. So, I didn't know the market was going to be up. I didn't care whether the market was going to be up or down. So I just, I'm a technician. So I don't really care what the market does for the most part. Some of the long-term positions do care. Like I'm in Tesla long-term, and a couple of days on Friday got hit really, really hard.
That sucks.
Exactly. But otherwise, I don't, sometimes people reach out to me and say, are you okay? I'm like, why wouldn't I be? Like, well, what's, and
you're not okay. Tesla went down 3%. I'm selling the house, selling the car, and moving the kids out. We're going on to a box on the street.
Exactly. So I'm, doing just fine. I don't care what the market does for the most part.
Sami, let's talk about that Oracle setup because I find it very interesting that, a lot of traders stay away from earnings because there's more risk. But, you have a strategy, it sounds like, that you go into earnings here. Talk about your Oracle setup and talk about what you did.
Happy to do it. I'm happy to honestly share the secret with everyone.
Because
because I don't think it would impact my strategy. The strategy is very simple. If you have a very strong stock that when you look at the stock, you look at the chart of the stock, the daily chart usually, and you look at the daily chart of the market, it just jumps out. You're like, whoa, this is pretty strong. And the day before earnings or the previous few days before earnings, the stock gets sold. Then I want to play that stock long because that means here's the Michael Jordan of stocks, really bullish, but the day or 2 days before earnings, it's getting sold. It means investor expectation is very low for the Michael Jordan of stocks. So low expectations for a really strong stock. That's what I want to do as an earnings play. So I sent out an alert yesterday and said to play the Oracle long. Was already published before the close. So, so I woke up this morning and the Oracle is up 8%. So I like that. But that's the strategy.
So you don't watch it after hours when it reports?
I don't. I try not to watch after hours. I had to leave early yesterday, so I wasn't even here towards the close. But I don't watch it in the post market because I tracked my performance, and whenever I get out in the post market, I'm much better off holding for the open the next day.
Oh, really? So, that's interesting.
Yeah. So, but basically, the strategy is I'm looking for a really strong stock with low expectations because then it's easy for the stock to gap up for the company to exceed those really low expectations. That's basically the strategy. So if you look at the Oracle daily chart, the last 2 days, it got sold hard. But if you compare Oracle daily chart to the Qs or the SPY daily chart, you'll see that Oracle has been basic near the all-time high, while the Qs, the NASDAQ, has been getting sold really hard. So Oracle, as soon as I scanned the earnings list yesterday, it stood out right away because I was like, wow, this is a lot stronger than the market. I wasn't even aware of Oracle. And then I saw that investors weren't too bullish on Oracle. That's perfect. Strong stock with low expectations, easy for the company to end up blowing out those expectations. So that's the idea, basically, the premise behind it. Of course I don't get it all. I don't get it right all the time.
Right.
So do you take a full size? I just want to keep going on this.
Go ahead.
Do you take a full size position on it because of the risk, or do you like half size of the position? Because often if I'm trading earnings, I go like a half size position because the move is going to be so significant that like a half size of my normal size position because I don't feel like losing 10% on my normal size if I'm wrong. Do you size down a bit on these trades?
No, so I have a completely different sizing strategy for earnings trades.
Okay.
So completely different than the rest of my trades, because you're right. You're expecting them to gap up or down. So the average earnings gap from having done over 5,500 earnings plays that are tracked, that are published in the Strategic Swing Trader program, having done over like 5,500, the average earnings gap is 6.3%. So I've been doing this strategy since 2017. So 6.3%. So now I know my risk. On average, it's 6% or 6.3 to be exact. And therefore, I can size appropriately.
Okay.
So, Sami, you mentioned that you have a new list every day. I mean, obviously, you're looking for new earnings plays and whatnot, but say there are no earnings on the tables. Where do you get your stocks that are on your list for the day to trade?
Yeah, that's a great question. So I scan for gapping stocks, whether it's earnings, news, upgrades, downgrades. PLTR yesterday, was added to the S&P 500. Obviously, that's not earnings, but it was a top watch for me on my gaps list. So that's the beauty of actually trading the gaps list, is no matter what the market is doing, whether it's earnings season or not earnings season, there's always going to be gapping stocks. And so that's the primary focus for me when it comes to day trading. When it comes to swing trading, I try to find stocks that are bottoming. And then the third main strategy that I do is earnings. That's it.
Sami, we all know getting into a trade is one thing, but getting out of a trade is another, right? So is this something where you're like, boom, like open, like ding, I'm out? Or do you look at the technicals and the pre-market action? Do you put a stop in? Because getting in is easier than getting out. Or do you scale out?
100%. So for the earnings plays, what I do is I wait out the first 5 minutes. I don't do anything. And once the first 5-minute bar closes, I put my stop under it. If I'm long, if I'm short, I put my stop right above it. So I've tracked, like I said, over 5,500 trades, and getting out at the open. I can also submit an order right now that will fill me at the opening tick. That leaves like 40% of the profit on the table. Whereas waiting for the first 5-minute bar to close and then putting the stop under it, I can almost double my profit. So that's what I do. I don't get out at the open. That's easy. That would be psychologically even easier for me to do. I actually wait until 9:35 and I put my stop right under that 5-minute bar's low. That's what I do.
Sami, someone in the chat's asking for your Twitter account or X account. Are you active on there?
I'm not really active on Twitter. I am not active on Twitter.
Okay. All right. Well, moving on. I guess, I mentioned this week, we obviously have the CPI report tomorrow. Are there any trades or plays that you're setting up kind of into this event? Are there any specific sectors right now that you think are setting up better than others? What's on your list heading in for the day?
So basically, I think there's not a lot of like amazing setups right now, but I really, really like real estate. And I've been bullish on real estate for quite some time. Yesterday, we got triggered into the COMP, COMP, which is the Compass, I guess. That triggered yesterday. That looks really, really nice. Check out the monthly chart on it. So that triggered for me yesterday. I, of course, like Redfin. I like Zillow. I like some of the mortgage REITs. So NLY, CIM, there's some mortgage REITs that I like. But from the real estate sector, I think I like COMP the most, COMP. There are some other positions that I like I'm in the 20-year treasuries, the TLT, but I'm actually in the leveraged TLT. So I'm in the TMF. That's an open position that looks good long-term. And there's other ideas that I have, like eBay looks good. There's a company called FIS. So Frank India Sam, that I like long-term. So I have some ideas like that, but in terms of sectors, I really like real estate right now. And if you look at real estate versus check out the IYR compared to the market, I mean IYR is a lot more bullish. Look at the monthly chart, so I'm liking real estate. I like the 20-year treasury. I like a few other stocks that I'm in, But for now, I'm focused on building longer term positions in real
Is that
estate.
because of rates? Is it because the rates are
It's
going
100%
down?
going up because of rates.
Yeah.
IYR, like that's all rates. So
Yeah. So
and
the
you might
rates
be
are,
looking. Do you? That's what I was going to ask you. Do you track like what the Fed's doing and anticipate these moves, or are you just looking like it's breaking out on the charts and the charts telling me the story?
So, I used to be an accountant, and I used to analyze an auditor. I used to analyze financial statements for a living. So I'm aware that the Fed is going to be cutting rates, and I'm aware of all these things. But I try to just be a technician, pure technician. So I take these plays because they really look good on the chart. But I'm also in the back of my mind aware that real estate stocks should probably benefit from the Fed lowering interest rates. So so am I doing it because of interest rates? Not really. I'm doing it because of the chart, but I'm also aware that the real estate stocks will probably benefit from lowered interest rates.
So you're just like all this recession news and everything. You're just like that's hogwash, man. We're ripping real estate. We're just saddle up. There's nothing stopping this market. We're just no recession in sight.
I don't think there is a recession coming. You're right, and I'm a bear by nature. I like to short a lot, but I also so I don't think that's happening because when it's a recession, it's immediate. It's not, there's some shock to the system. You don't get, like, I got a call the other day from a relative and asking me if there's a recession, if we're heading into a recession. And I said, I'm not, who knows for sure? I don't think so. But in the back of my mind, I was thinking, if people are thinking about a recession, it's not happening. If a recession usually happens when nobody's expecting it. So it creates a shock to the system, and that's how a recession happens. In this case, everybody's talking about it. I mean, it's not coming. I don't think it is. But the beauty of being a technician is that I can change my opinion as soon as I see that I need to change my opinion. Right now, for me, the chart of the market is very sloppy. We lost that tight uptrend. It's very, very sloppy, but it hasn't really turned bearish. I know we had a big sell-off recently, but it's still longer term still is bullish to me, but very sloppy, not as before when it was really nice tight uptrend. So that's what I think. I don't think there's a recession coming, honestly.
Sami, tell us a little bit about this ebook that we have available, the Sami's free trend, and it's talking about some of the tactics that you also talk about in your trading course. We've got a link for that ebook in the description.
Well, I guarantee you will like that ebook. It's very, very nice and simple if you download it. Basically talks about how I truly trade. So if it's an uptrend, where I look to play long. If it's a downtrend, where I look to play short. How to find support, resistance, trend lines. So that's what I do. I try to keep it very simple. I don't, if you look at my charts, I have two moving averages on there, the 20 and the 200, and that's it. I don't use any other indicators at all. And
what ones do you use?
The 20 and the 200 simple moving averages, and volume. And that is it. And I could do without volume, to tell you the truth. And that's all I put on my charts. I try to be I try to keep things really simple, and I try to be true to the chart. Like if the chart is bullish, it's gonna stand out. If it's bearish, it's gonna stand out. I don't need to have a spaghetti chart. I don't need to have a million things on my chart. You know what I mean? So that's what the ebook is about. It's very neat and simple. And it's like 11 pages long. It kind of summarizes what I do as a technician. So
Very nice.
highly recommend it, and it's free.
All right, well,
Great.
we've been on the line with Sami Abusaad, of course, coming from T3. We love our T3 Tuesdays here at PreMarket Prep. Hit that QR code on the screen or the link in the description to check out that free ebook. Sami, good luck with your trading for the rest of the week. We might see some fireworks tomorrow with CPI, and then don't forget, we got PPI coming the next day. So lots of potential market moving catalysts coming the rest of this week.
Thanks for having me. Take care, guys.